So over the last 24 hours, we've learned that the Federal Reserve and global markets are asking themselves completely different questions about the US economy and the likely path of inflation and interest rates. The Federal Reserve does not deal with hypotheticals, so they have assessed, as they always do, the current strength of the US labor market and the likely path of inflation. As a result, they hiked interest rates by 25 basis points last night and signaled a reasonably gentle curve next year and beyond. They'll probably see interest rates go up another 2 or 3 times in 2017. Markets, in the meantime, are nervously pricing in the prospect of Trumpflation, which is really an expectation of a far steeper cycle from the Federal Reserve that's driven by faster than expected inflation, which in turn is triggered by fiscal easing from an incoming Trump administration. Now, the results of really last night's Federal Reserve rate hike have been a whole lot more dramatic than what we saw in 2015, and my hunch is that this is because of expectations of wholesale reflation and a fixed income sell-off driven by fiscal policy directed by the Trump administration. Now, globally, we've seen central banks really look for this sort of currency weakness, although not officially, for a long time. And so in the short run, the Bank of Japan and the ECB may find themselves thanking their lucky stars. However, the question is, in 2017, if reflation begins to pick up globally, will the ECB and the Bank of Japan be forced off their current extreme setting of monetary policy? And what will the response in the currency markets and indeed fixed income markets be? Emerging markets also are another potential site of extreme volatility that could be triggered by a steeper Fed curve in 2017. We've already seen the effects of even a hypothetical Fed rate hike over the last 2 years with a series of taper tantrums. But if we're facing a Federal Reserve that is looking at a steeper than expected hiking cycle, the consequences for emerging markets that have been used to easy money for the last 10 years really could be quite spectacular. So going into 2017, the biggest question that really markets will be looking to answer will be, is Trumpflation real? Will Donald Trump manage to enact his much discussed tax cuts and infrastructure spending? Will inflation in the United States pick up? And most importantly, how will the Federal Reserve adjust the outlook for monetary policy as a result?